Hello and welcome to this Cornerstone Finance Group podcast brought to you by Business News Wales and sponsored by Halifax for Intermediaries. I'm Gemma Casey, editor of Business News Wales, and in this episode we're going to be looking at turning your customers into clients. Well, 2025 and 2026 are landmark years in the mortgage industry as a record number of fixed rate deals are set to expire. So against that backdrop, how can proactive client engagement and strategic planning benefit clients and a mortgage advisory business itself? Well, with me to discuss this are Rachel Ramsay of Ramsay Financial Limited. Hi, Rachel.
Hi, Gemma.
Matt Lindsey of Amber Shield Finance Limited. Hi, Matt.
Hi, Gemma.
Joe Brown, National Account Manager for Intermediaries at Lloyds Banking Group. Hi, Joe.
Hi, Gemma.
And finally, Gareth Gale, Corporate Account Manager at Halifax Intermediaries. Hi, Gareth.
Hi, Gemma.
Welcome all and thank you for joining me. Now, Rachel, if I can come to you first, tell us first of all very briefly about your business, your background, where you're based and how long you've been established.
Thank you, Gemma. Yeah, so I've been established just coming up to 2 years. So I'm fairly new in this arena. However, previously to that, I was employed by the RBS for 20 years. So a thorough background in financial services and compliance and relationship building as well, which is really key to the conversation that we're going to have today.
And Rachel, on that, we're looking today at turning your customers into clients. What do you think is the difference between the term customer and the term client?
Well, I have been actually thinking about that. And I think that the difference is where customers may ask you buy through social media channels, they may view your website, and they may have conversations with friends and colleagues that maybe done business with you in the past and maybe just trying to find out more about you. And then clients are those that make that contact. And then from that, it's building the relationship and just developing that relationship into obviously business and helping that client further.
That's a lovely distinction there. Matt, tell us briefly a little bit about your business, Amber Shield Finance.
Yes, so Amber Shield, we're based in Newport in South Wales, but we do have customers all over the UK. We've also got a trading style called Blue Light Mortgages, which specialises in mostly status workers, blue light workers, etc. And they come from all forces across the UK, all different NHS trusts. My background is I was actually in the police for just under 17 years, left in 2020, and that's when I embarked on my career in financial services. So I worked under a few different networks beforehand for a few different companies, and then I joined Cornerstone in 2024.
And what Rachel has been saying there about the difference between a customer and a client, is that something that resonates with you, Matt? And why does it matter?
Yeah, so as you say, that a customer could be somebody kind of, as Rachel says, just kind of jumps on your website and books an appointment. So you might do business with them. It could be like a product switch, which doesn't take very long, and that's the only interaction. Hopefully they'll come back in 2 years' time, or you should proactively contact them 6 months before or a few months before. But a client would be somebody who, like, for example, I've had some clients who've come to me over a long period of time, say they've got impaired credit, and we've gone through that journey together where I've got their credit reports and I've given them some advice as to managing their credit profile and improving their credit score. And I've got lots of customers who will message me or phone me about asking about other financial services. And I think it's important, even if it's something you don't offer, I think it is important to gain good relationships with other providers of financial services so you can direct your clients in the right direction and obviously make sure they're trustworthy people, because you don't want to give them send them to somebody who's not going to do a good job, because it's going to reflect value on yourself. But I feel like I've got lots of clients, if I'm honest. I'm very lucky.
Thank you, Matt. Joe, you're a National Account Manager for Intermediaries with Lloyds Banking Group. We've had some really interesting insights there from Rachel and Matt about what a client relationship looks like. And one of the points Matt made there was about identifying other client needs and being able to support with that. From your point of view and your experience of working with intermediaries, how vital is it that mortgage advisors do really sort of foster those relationships with their clients?
Yeah. I'm going to use a word called nurturing. And I think Matt did touch on it there in terms of, the customer might not always be mortgage ready. So if you think of first time buyers, you might have someone walk in that's currently renting. How do you get those people mortgage ready? Because they might not be at that point. Um, and you might not get business at that point. I mean, for me personally, I think there's always an opportunity from a protection point of view so the renter's income is protected to enable them to get on that journey. Similarly, if you've got someone that has got poor credit history because something's happened to them along the way, things happen all the time to everyone. It's how do you nurture them and help them? Because in my experience, that customer will always then come back to you and become that client when they are ready because you build that trust and you give them the right advice in terms of what to do. So for me, it's that whole nurturing piece as well, and not always expecting that someone's walking through the door, you're chatting to them, and that's going to mean business because that business might be, in a year's time, 2 years' time, but that's when they truly do become your client.
Gareth, to pick up with you on something that Joe said there and building on what Rachel and Matt have said, um, in your experience of working with intermediaries, how important is it that advisors do have that relationship rather than it being a purely transactional basis that they're working with clients on?
Yeah, thanks, Gemma. And I think it's essential. You said at the start of the episode that 2025, 2026 are going to be some of the biggest years we're seeing for customers coming off their current fixed deals. And it gives advisors a real opportunity to explore what's changed with those clients. I think really understanding not just what's happening in their mortgage situation, but what else is happening across both finance, protection, family. The gives you the gateway to explore all of the different opportunities. So, yeah, I think that difference between a customer and a client has been summed up really nicely.
Rachel, an interesting point there from Gareth, bringing it back to the current climate that we find ourselves in with all these fixed rate expiries coming up. Tell us about some of the tools and techniques that you use to make sure that you are in the right place to be having those really positive, proactive conversations with your clients.
Yeah, so I think initially it's just being completely aware of this new financial climate that customers are going to find themselves in. And clients and customers are emerging from lower interest rates from 5 years ago. Maybe circumstances have changed due to the impact of COVID. People are finding themselves in more financial difficulty, struggling to pay financial commitments on time, which leads to credit lips. And where previously they may have gone direct to their high street bank, we're now seeing less and less visibility of high street banks, which has made that relationship more difficult. And so having the broker relationship means that we can offer more of a wide range of services and advice, and guide these clients through the changes and the increase of rates, and also rising bills and costs of living. So I think primarily it's being aware of these changes and being ready to support the clients.
Joe, Rachel raised a good point there about how a broker can offer their clients sort of a whole of market approach. Now, you obviously you are here representing a bank, but you are
Yeah,
from the intermediary side of things.
we
So
are.
tell us a little bit about your view on what the advantages are that a mortgage advisor can bring to their clients in this conversation.
Yeah, so it's not just a one-stop shop, is it, with one rate, which you will get from a high street. So for me, what the intermediary brings is that breadth of, choices right across the market with numerous different lenders that the advisor can really drill down into, and what fits that client need in terms of, is it a fixed rate? Is it maybe lengthening the term? It could even be shortening the term. It could be that they've got extra funds available and now they're in a position where they can look at protection, whether that be about protecting their income, about life. It could be indeed general insurance. There's so many different options, and I think there's so many different changes that could have happened. And also, I know we've touched on the refinance piece, but it's what do they do at the end of their and what can the broker do. And it's not necessarily just about if they want extra funds because, I don't know, they've got some debt consolidation that they maybe need to do, or there's a big purchase. There's lots of different options out there. And I know Gareth can touch on some of the things that Halifax intermediaries would be able to do in terms of that offering that just gives the broker another, string to his bow in terms of helping that customer and guide them through that process.
Gareth, let's bring you in there then. Talk to us a little bit about those options that Joe references there.
So I guess one of the frustrations that I probably see when I'm out speaking with mortgage intermediaries is that they want to move away from that product transfer because it's a very simple transaction. And it's probably because they're not spending the time to really look at the options available to them. So I would say for any mortgage intermediary, really get to understand the other things that a bank is offering at that critical point of time. So just at Halifax, we can look at extending terms, as Joe mentioned. We can shorten terms. We can look at moving stuff onto interest only. We can add additional borrowing. And these are all things that probably link into what Rachel was saying right at the start of the episode. This is helping to move your customer to a client. You're not just creating that transaction for them. You're looking at how you can support them and help them grow. There's a lot of talk in the media around sustainability. It's massive across the mortgage industry at the moment, and how we help our clients on that journey to a more sustainable home. Just one thing that's come out of Halifax quite recently around a green living reward means that we'll pay a cashback to a customer if they carry out a home improvement that improves the efficiency of their property. It's not linked to a product. It's not linked with any other advice, but it's really important that these sorts of schemes across Halifax and all the other lenders are really understood by the mortgage advisors, because that's where we can really add value to the customers.
And it's free money, isn't it, Gareth? So that green living reward, who doesn't want something free? It is really free money. There are no catches. So I'd urge anyone to look at that, because that's helping so many clients at the moment, and the client's getting something out of it, and they might get cheaper bills at the end of it, and all that helps in terms of, that overall piece in terms of it's not just a mortgage. This is about enabling them to have a home that's, of sufficient standard, that's good quality, and everyone deserves to live in, a good quality home.
And Rachel, presumably, if you have that kind of result for your client, that is going to help build their loyalty towards you as their advisor.
Yeah, 100%. I mean, now, 2 years into having the firm, I'm seeing clients return. I'm seeing clients refer me to other friends and family. So it's evident that that relationship has, deepened, and it continues, and long may it continue.
Matt, Gareth has outlined there, there's a lot of opportunity, and that is just with the one bank, the Halifax. So there's a lot for a mortgage advisor to keep across, isn't there? A lot to be aware of. Talk us through, how do you prepare for those conversations with clients, whether they're coming up for a remortgage, or whether there's something else in their sort of financial background that is causing you to have that conversation on the horizon?
I think it's about asking the right questions, getting to know your client properly, and understanding that, like as people have said, the journey they've been on, especially through COVID. When I first started, the rates were so low. I feel like the customers, they weren't that sort of interested to save a few pound on their mortgage. They could just go anywhere in the high street. The rates were so low. It was, and every time I did a remortgage, it was just great news. Everyone was so happy. Obviously, these days now it's the opposite, and almost every remortgage is going to increase their monthly payment. So we do have to be aware of the options, extending the terms, looking at other lenders, again, seeing if they qualify for a green product, if they've had home improvements, solar panels, that type of thing, and improve their EPC rating. But I think the main thing is knowing the resources that are available. Again, obviously, we're with Cornerstone, and Acres, really intuitive system. There's also other systems where you can compare different criteria and things like that. And again, it's just I think it's managing the client's expectations as well. And doing the thing that's right for them. We don't know what's going to happen over the next 2 years or 5 years. So our advice needs to be based on their circumstances now. And obviously we have to keep an eye on the future, but the whole "we haven't got a crystal ball" thing, I think it is true, and I think we have to just listen to our clients, identify their needs, and try and do the best thing for them as often as we can, really.
You mentioned briefly there the Acre portal. Tell us, Matt, what that is and how you engage with that and the benefits you get from that Acre platform.
So the beauty with for myself, my business. So again, I've got sort of a few different police forces. So we do deal with quite high volume of customers, new customers every month, and you know, it my process would be to send them an invitation. So they book an appointment through my website. I send them an invitation to Acre, and then I can do a lot of research before we even get on the phone. So when we have our phone conversations, they're more concise. I can check the client's credit report. So if they have had some problems in the last few years, we can see, and we'll have a good idea as to, whether it's going to be a specialist client, whether it's going to be a high street sort of main street lender, and what options are available to them. We'll see their loan to value, which again would kind of affect the rates they're going to get. So it's the best system I've used. I've used a few different systems, and I find it my clients love it as well. It really keeps our conversations kind of concise. We still and the thing is, I know that people think that you need to have a long conversation to build rapport and get to know your client, but when we've got all the information, before you can actually speak to them about their life more. You can actually be more interested in their hobbies and their interests and find out what they actually want to achieve, because you don't have to go through every single outgoing. You don't have to do it because the system pulls it all through for you. So I think utilizing technology, I think, is a must for any mortgage advisor trying to sort of, maximize their efficiency with time and give the customers the best results.
And Rachel, what are some of the other ways that Cornerstone supports you with the whole mindset around cultivating a relationship management approach?
Yeah, so I mean, echoing Matt's comments around Acre, which does offer the complete package and support. Cornerstone offer access to other services as well and tools, such as knowledge base and lots of ways we can help support and advise and collect information and compare products, etc., as well as the support offered through the team. And I think with Cornerstone being, having the infrastructure of a big network, but also being small enough to, know you by name, be there when you need them. You can pick up the phone, and I think that's really, really helpful, and it's definitely helped me on my journey.
Joe, that is a really interesting point that Rachel has made there about Cornerstone, being big enough to be really effective, but actually small enough to really be able to use your word, nurture those relationships.
Yeah.
What about the relationships the other way, with the banks, with the
Laura,
intermediary managers such as yourself?
yeah, I have quite a close relationship with Cornerstone. I actually look after Sesame Bank Group, which Cornerstone are part of. But having seen their growth over the last few years, um, it became apparent that we just needed to get closer, and that's why now Gareth's come into the fold as well to give Cornerstone that bit more attention and that time, whilst I focus on the strategic relationship up at an SBG level. And I know from Sesame Bank Group, they're doing a lot at the moment in terms of helping networks, businesses to start their business, run the business, grow the business, and actually exit the business as well, because some people do want to do that, but they don't quite know how. So there's something for everyone, and those strategies really fit well together, both from a Lloyds banking group level down to Sesame Bank Hall and then to Cornerstone. And I think that's where it all comes together in terms of that collaboration. So that's what's really enjoyable about working with Cornerstone Group.
Gareth, same question to you, really. Your experience of working with the Cornerstone group, how have you seen this focus on relationship building really shine through?
Yeah, I think it's really been at the heart of what they're trying to do, which is really exciting to see. I know both Rachel and Matt spoke around the ecosystem, and you hear a lot in the industry around how tech is revolutionizing the mortgage industry, and it is. We're maybe a little way away from AI taking over for mortgage advisors, but actually where we're at the moment is there are lots of really good tools that means the mortgage advisors can do what they do best, which is build a relationship with their client. So what I would probably say what you see at Cornerstone and what you would encourage people to do is look at how tech can free up your time. It's not to necessarily change what you do, but it takes away those annoying admin tasks that gives you more time to really nurture that client and move your customers into that client space.
And I don't think AI will ever take over that advice piece ever, because we always need to check in and we always need that human touch. I think that's just how we're built. But as Gareth said, in terms of freeing up that time for the advisor to then concentrate on that advice piece and spend more time with the client, Matt touched on it as well. If you've got all of that information, it just enables you to have that more in depth and know about your client before you actually sit down in front of them and know a bit about their story and help you to delve into different areas. And I think that's where it strengthens that whole conversation and enables you to have that broader conversation, maybe as well, about their needs.
I think as well. I think just going on the technology as well. I think we went through a phase. I think where everything was becoming automated. Like if you go on the comparison websites, but now I think we've almost gone through that phase where people want to speak to an expert, because I know if I sign up for it could be anything, I'm going to get loads of emails like kind of spam, from where people trying to sell me their services and stuff, as opposed to actually actually speaking to somebody that I've chosen based on their Trustpilot reviews, based on their FCA registration and everything else. So I think we're in a good space where the tech is really helping. I agree with Joe. I don't think we will get to a point anytime soon where AI will replace mortgage advisors, because I think it is a qualification you have to give the advice. So thankfully, otherwise otherwise our days would be numbered, and I'd have to get my police uniform back on, which definitely isn't going to fit me at this stage of my life. So yeah, I think we're in a good space at the moment with technology and personal interaction and the personal touch. So it works well.
Interesting times. Thank you. So I'm conscious of time, so one more question for you all, the same question to each of you. I'm interested to know what your one piece of advice would be to mortgage advisors listening to this on how they can really approach this whole thing of turning customers into clients. So how do they really build a relationship with their customers? Rachel, what would your one piece of advice be?
I think it's being organized and listening to your clients, taking everybody's comments on board around technology and AI, using it as a tool to support, to complement what we offer. You can't take away that personal touch. I think it's, really understanding and listening and nurturing and having regular touch points with your clients, and just, being on a journey with them, and just continuing.
Lovely. Thank you, Rachel. Gareth, same question to you. Your one bit of advice in turning customers into clients.
I think it's really getting to understand that customer and using any opportunity you have to have an interaction with that customer, explore their wider financial needs. So it's not a mortgage transaction. This is an opportunity to really understand and support your clients through a whole host of financial products and services.
Thank you, Gareth. Matt?
I think be yourself, and I think try and put your clients at ease. You want it to be an enjoyable experience for them. Like they're buying, especially first time buyers. Well, they come, they've been referred by someone else, and they contact me, and I'm like, yeah, don't worry, we're going to get it all sorted. Obviously, you got to manage the expectations, but I think just try and make it an enjoyable experience for your clients, and then they'll come back. If you're going to be completely robotic and just talking about the numbers, nothing else, there's no human connection, then I don't know. I feel like you're going to lose customers without that human connection.
There's a definite common thread here, isn't there, about that human element and the sort of warmth that a good mortgage advisor brings. Joe, final word to you.
Yeah, so I think I'll come back to that word nurturing. And I think it's about using all of those touch points. Don't just leave it every 2 years until the customer's coming to an end of a rate, or 5 years. Speak to your customers at least yearly, annually. Use some of those other products that go alongside. They fit hand in hand with the mortgage. So mortgage protection, general insurance, use those as points where you can contact and get in touch with the customer and just check in on them to see what's happening, and don't always think that appointment has got to end up with a business at the end of it, because, if you do that and you do nurture them, they will come back to you, most definitely.
Great advice from all of you there. Well, thank you so much to my guests, to Rachel, Matt, Joe and Gareth, and thank you for listening.